Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's Landon Swan, co-founder of Likefolio. Welcome back to the show, Landon.
Thanks. It's great to be here.
All right. So great to be a Carvana shareholder over the last 12 months also. The stock has rocketed about 400% higher. Now, you guys, we've covered this stock over the last couple of years, and you guys have nailed it as far as your data goes and what that is stating at this point. There was a short report out of Hindenburg at the beginning of the year. And if you shorted it then, you've gotten your face ripped off because the stock has continued to move up to 3-year highs. I mean, are you guys still seeing that same data? It just seems like some of the previous numbers that we looked at with you, it just seems skewed compared to some of its competitors as far as how much they make per car.
Right. It's wild. We're trying to figure that out, frankly. But yeah, I mean, it depends on, as far as that short selling report, if you shorted with it, you may have made some money. I mean, the stock almost went down $100. It's completely recovered since then. And, it's actually kind of a shame that I'm on today. It should be Megan. She was on the show January 3rd when we talked about this. We called this a buying opportunity. Carvana's up, I think, 63% since then. So hopefully the listeners were able to take advantage of that. But yeah, this stock is nuts. I mean, it's up, from $48 to $288, hitting all-time highs today, just a little bit off the highs right now, about 1% off. But, they had a great quarter last quarter. The sales are up 30% year over year. The earnings per share went from 14 cents to 64 cents. And they, one of the things that I think got people excited is they talked about the fact that they've got 1% market share right now. And it's a big market. So, obviously you start thinking, well, what if they get to 10%? What if they get to 20%? And, the multiplication starts happening in your head. Now, a lot of that is priced in, clearly. A lot of that is priced in. So I think that, people have to understand that, yeah, if they 5X, their sales, that doesn't necessarily mean the stock price is going to 5X. But they've done a lot of cost cutting. They've done, they did some debt restructuring. Their operations have become more efficient. And so it's just been a good quarter for them. And when we look at the data, it's still continuing. Their web data is strong. People are visiting at a much higher rate, plus 20% on a year-over-year basis. And you compare that to CarMax, they're losing 7% on a year-over-year basis. So they're beating their competition. Their profit per vehicle is insane compared to CarMax. I mean, I think it's about 3x what CarMax is putting out. So, they're doing a lot of good things. And right now they're actually boosting inventory to meet the rising demand. So this is, very high expectations going into this one. Of course, the shares are at all-time highs today, or hitting all-time highs today. So the expectations are going to be very high. It's going to be tough to meet these expectations, but everything that we've got shows the company's doing really well. This is the chart like you were kind of talking about, like how are they making so much compared to their competition? It's incredible. And, I think this is what investors want to see. They've also got some rising interest from their NASCAR collaboration. So I wouldn't be surprised if we see more popular events like that being promoted from Carvana. But just overall, this is a company that's just done really well. And frankly, personally, I didn't see it coming. Like the data said it was coming. So if I believe the Likefolio data, I'm in. But personally, I was just like, I don't know about this company. It's kind of, it's weird. It's got the vending machine there. They grab your eye when you're driving down the road. But what kind of business is this? And they're proving the doubters wrong with fantastic numbers. And like you said, short sellers are in pain. And longs are loving life right now.
Landon, if you look at the 5-year chart on Carvana, it shows they have some room that the stock can still run. The 5-year high is $376, almost about $90 higher than where it is now. I'm going to give you a bunch of positives, Landon. Then I'm going to throw a big wet blanket on it right at the end. So brace yourself. Used car sales are rebounding. Why? I'll give you a theory on why used car sales are rebounding. How about back to work? And people need cars, right? You see it in the CPI data. Used car sales used car prices were up 2.2% last month as return to office. People probably need cars. They've got a new credit facility with Ally Bank. The Hindenburg report seems pretty much dismissed, although we don't know about that. Auto loan defaults are plateauing. These are all good things. Now, here's my statement. I am not a car dealer or a car analyst, but I have a friend in the car business. And when I told him the number that Carvana makes per used car sold, he looked at me and goes, no way. There's no chance they make that much money per car. So I don't know what to think, but something here isn't as it appears, Landon.
Yeah, I think that's what that's what I think is giving people pause, and that's why I think that Hindenburg research report had legs for a while. I mean, that's what drove the stock down nearly $100. Is that it's been a head scratcher for people. So if you can come out with anything bearish that somewhat explains or just throws some doubt on the company, then I think a lot of people are going to jump on board. Now we may, years from now, we may look back on this one and be like, wow, obviously they couldn't have made that much money per car. This was the reason, right? We don't have that information right now. And I guess, investors are telling themselves, and I think it's reasonable, well, if they're reporting it, maybe it's actually true. I mean, I get it. It's an insane number. And CarMax is probably looking at them like, how can you make $7,000 per car? And so I'm not entirely certain. I'm not in the business, so I can't claim to know. I can just tell you what the data says. The data says that the consumers are happy with the product and that they're moving there in significant numbers. I mean, again, we're looking at CarMax down 7% year over year, Carvana up almost 20% year over year on web visits. That's a significant move, and it's not just a macro trend pushing things in that direction, right? Like I do believe that there are macro trends going that way. I think that used cars are finally kind of normalizing after all the COVID lockdowns. And like you said, back to work is pushing people to, actually have to drive now. So yeah, absolutely. I think there's some trends, but it's not just trends, because if it were, then CarMax would be on the positive side. This is them differentiating themselves and saying, we're better at this game than CarMax is. And we're so much better that we deserve this really high valuation, high price. So far, Wall Street's buying it, but I think they're looking for any reason to dismiss it, which I think that Hindenburg report shows. So if there's any kind of weakness coming into this report, I wouldn't be surprised if it sold off big. I don't expect any weakness. That's just kind of my, just a warning there that if there is any weakness, I think people are ready to bail on this one. But we're seeing only strength coming from it. And so, here we still are bullish, even though we're basically at the 1-year highs, and, maybe we'll get those all-time highs again.
Yep. Nobody wants to sit in a car dealership going through all that paperwork. Maybe that's part of it too. The ease of just getting the car delivered to you. We don't have to sit there for 3 hours, even if you're paying cash. Landon, what's the earnings score on this one? Because it's overbought on a technical basis, but it has been quite a few times over the last year.
Right. So we're actually at plus 22, which is just on the side of we're willing to take a small bet to the upside, which I know. I mean, I look at this and I'm thinking, God, the expectations got to be so high. The stock has run everything. All the numbers are out, and it's got to be perfect. But I based on the data, based on all of this, where consumers are happy and they're continuing to move to this company, we still think there's a little bit to the upside here. Warning being, stay risk defined, because if it goes the wrong way, I think it goes hard the wrong way. But we're still betting bullish on this one at plus 22.
All right. Great breakdown. Great data as always, Landon. Have a good day.
Thank you.
All right. That's Landon Swan, co-founder of Folio.